share with TCS? Take us
Okay,
through
so first the numbers are anticipated about 3:45, 4 p.m. The press are scheduled at 4:30 p.m. Now let me quickly run you through the key numbers from Infosys this time. Dollar revenue growth of 1.3%, and this is likely to be less than TCS even after the miss on TCS. 1.33% dollar revenue growth. Constant currency revenue growth is also seen quite muted at just 0.4%, and again, this is lower than TCS's missed constant currency revenue growth. Margins are anticipated to remain at the same level as they were, so no change in Infosys management, something that we had seen in the case of TCS as well.
Okay, so that is on what we can really expect from TCS this time around. But Reema, you've been telling us for the past few days that with Infy, it's really the guidance which is going to be the main thing to watch. So what should we expect now?
Well, right now, consensus estimates is that it's going to be about a 6 to 8% constant currency revenue growth for next year. But this is going to be, significantly slower than the growth that they're going to clock in this year. They're going to end FY23 with a 16 to 16.5% growth, even after accounting for a muted Q4. Right? So growth rates are going to really fall off on account of a high base and general slowdown. There are a few people who believe growth could be 5 to 7% as well. The key is going to be the margin guidance. Now, Infy typically guides for 21 to 23%. Last year, what they did is they brought down the margin guidance to 21 to 22% on account of a high wage bill. Okay, so this year they're going to end with margins between 21 to 22%. Now the street says, since the supply side situation is easing, you're not paying a big premium to hire laterals and your wage bill, your freshers, etc. is coming down, then you need to go back to what your margins used to be. Right? Last year was an aberration in terms of a high wage bill. So now the key is going to be a margin guidance of 21 to 23%.
If they can go back to revert back to the
they need to revert
band.
back to what the original band basically is. And if they can do that, then the street will have confidence that indeed the supply side situation is easing.
Okay, so I think there's a lot to watch for in this. But Reema, what could constitute a clear disappointment? I mean, if they don't up their margin guidance, will that be the biggest disappointment, or will just headline, top line revenue growth? Can that be the big risk?
I think both, right? 6 to 8% is what the consensus is. There are a few analysts who believe 5 to 7% is also possible. If they come out with, a 5 to 7% kind of growth, it would be a bit disappointing, right? And again, if they don't up the upper end of the margin guidance, then it will be a disappointment, right? Okay. Current margin guidance is 21 to 22%. Street is saying it should come up to 21 to 23%. So at least the upper end of the margin guidance needs to be raised. So a low number, 5% type of constant currency revenue growth, and no increase in the margin guidance.
Okay. All right, got that. Infosys has that famous under-promise and over-deliver line as well, right? But Reema, lastly on the stocks, just take us through how the valuations look for these, because TCS is more expensive, right?
Yeah, so just, on that point that you made about how, Infosys tends to under-promise and then over-deliver, that is the case. So whenever they come out with a guidance, the street is going to look at it fairly conservatively. You know what they did last year, FY22? They had started the year with a 13 to 15% revenue guidance. Then every quarter, in June, in September, in December, they upped it. And they finally ended with 16 to 16.5%. So this time as well, given the uncertainty, there is a possibility that the guidance is going to be fairly conservative. So the management commentary is going to be watched very closely. In terms of the stock performance, Infy has underperformed TCS. One, on account of fears of what the guidance is going to be, and two, because there have been some exits at the top level. Mohit Joshi, remember, moved to Tech Mahindra. They lost Ravi Kumar to Cognizant. These were two precedents right below Salil Parekh, the CEO. So that's the reason why Infy has been an underperformer versus TCS. But let the valuation plate come up. Now, Infy's valuations are 21 times forward multiple, lower than TCS. Right? But for the last, let me get that number, 4 years in a row, Infy has beaten TCS in terms of its annual growth. In FY20, FY21, FY22, and now FY23, the growth rate is going to be higher, right? So if that's the case, and even next year, the street believes that Infy is going to grow faster, then shouldn't the valuation differential also start narrowing down, right? Or catching up in some way. So, I think there is going to be some chatter on that.
I think that I wonder if this is going to be 1 year where Infy guides conservatively because the environment is conservative and they basically mean what they say.
And the street is going to say, no,
I think you're going to do better.
Oh, well, it's going to be an interesting evening for sure. Yeah. Thank you so much for all of the details and the analysis there, Reema. Of course, you can catch Reema with the Infosys